as you guys know, in the previous one, there was an SMT that was outlined between these lows right here, between the NASDAQ and the S&P, which caused price to drive higher into this daily fair value gap. Now, I got a lot of questions asking why we used intermarket SMT at this fair value gap, which we will cover later in this one. But it's important to keep in mind that whenever I said this daily fair value gap will hold importance to the weekly range, depending on where we close, we will either run this high or return back into these lows. So study and pay attention on the NASDAQ to where we close within that fair value gap. I'll say this one more time. I believe I said it in the pre-recorded lecture, but I'll say it one more time because it holds importance. On the NASDAQ, we closed right at the low end of that fair value gap, which gives insight that we are likely to respect this fair value gap. Ignore the wicks. The bodies tell the story, the wicks do the damage. So why is this fair value gap important? Why was this outlined? Because our narrative, since up here, has been bearish, our higher time frame narrative. So following that narrative of higher time frame bearishness, from this swing high to this swing low, this is our premium and discount range. And if you followed along with the pre-recorded lecture, you guys will understand why this candle and this candle are still incorporated in the premium and discount range, even though last week this was the highest point, or the highest point of the weekly candle last week. So as you can see, we retraced back into premium, which allowed for insight on where that daily candle closed to seek bearish delivery following along with our higher time frame narrative. So this SMT caused a retracement into a premium array that allowed for continuation of the real move. Within this premium array, as soon as you identify based off the closure, that is whenever you begin to look for intermarket SMT. So I get a lot of questions asked, am I supposed to look at intermarket SMT all the time? No. The only time you should look for intermarket SMT is under certain criteria like this. When we're inside of a key level that holds substance and is in tune with our narrative. And if we bring in the Dow, as you can see, the Dow formed a daily TPD where we tagged into that daily fair value gap. So why didn't we return into this high? Do you see how big that wick is on the Dow? Whenever you have an extremely large wick like this, more times than not, you can expect there to be no SMT at all. And that was another clue to why you could have used the Forex triad. So within the Forex triad, if we remove the wicks, there was a monthly, look at the other, there we go. There was a monthly hidden SMT. And the time that this monthly SMT formed is the same time that we tagged into this key level. And now if we turn the wicks back on, you can see there was also confirming that initial weekly SMT. So the Forex triad became in sync with the futures triad at this moment. Why did it become in sync? It formed an SMT in the same direction that we would expect this key level to hold. So whenever this daily candle closes, that's whenever you can say, okay, now I can go into the Forex triad, and if there's something supporting the idea within the Forex triad, then that's whenever I can use intermarket SMT. And as you can see, during the London session, I believe it was, yes, during the London session, we ran the high on the pound and also formed an SMT within the triad, which caused price to reverse on this candle. And that's why we didn't need to return into this high, because during the overnight session, and the overnight session is just London session, during the overnight session, we already formed that SMT, that intermarket SMT. So once we form that, there's no longer a need to trade above this high, because we're already trading inside of that key level. And we expect this key level to hold. We don't want to see it trade back into this high. And how do we get that information? From the closure of the body, because we see the body is respecting it. And you guys already know what was outlined. Where price retraced was inside of that hourly fair value gap. So we're going from a daily key level to an hourly fair value gap that formed within that daily key level, which follows along with the time frame alignment. So does that make sense for everybody? So the only time you should look for intermarket relations is whenever you are prompted a reason to. If you hit a key level, because you can just focus on the immediate triad. You can focus on the immediate triad, but once you're given a reason, like this right here, what was our higher time frame narrative? Bearish. If we look at premium and discount, this is our high, this is our low. We trade into a premium array, which will support bearish price movement for the continuation. After we tag that, that's when we're given the reason, okay, now we can look at intermarket analysis. And if the higher time frame for the other triad you're using is also in tune with what you're seeing on the future triad, that makes it high probability intermarket SMT. So you don't need to look at the Forex triad 24/7, only whenever you're given a reason to inside of a key level. Or there is also an SMT, and you just need a little bit else. Key level without SMT, then look for intermarket SMT. Yes. The closure within the daily fair value gap, as long as it's below, yes. So another little trick is, you see, if we turn on the midpoint of that fair value gap that was outlined, you guys can see that body closed below that midpoint. One little, this is for your notes, a little cookie and a little nugget is, whenever you are approaching a higher time frame fair value gap, if that same time frame, for example, we have a daily fair value gap and we have this daily candle closed below the midpoint of that fair value gap, which gives us insight that it's likely to respect it and then make an intra-week reversal. If it would have closed above that midpoint and it closed above here, then we could have found a reason to expect this high to be broken. When do you use bonds in the Forex triad? Why don't you consider bonds for the intermarket analysis? Because they are decoupled. Do you think it's really necessary to watch the Forex triad? Only if you trade Forex. But since I've been asked, what do I think Forex is going to do next? We can more than likely see continuation of what we've already been doing. So I believe the low of the week should be in for Forex. So we can expect this high on dollar to be ran, and then this low to be ran on euro. And even though we have this SMT right here, since we already have this SMT and a second stage, this is a true reversal for this cycle. So we can expect continuation of what we've already been doing. And now for what I think is going to happen next. Of course, you guys know these unsymmetrical lows are in the crosshairs, but we have a daily TPD that formed. And you can only see this daily TPD if you have the settlement price turned off. So whenever you see a daily TPD and you have to toggle between the settlement price, that is a low probability TPD. But we still can be given insight on this. So if we go from the daily time frame to the hourly time frame, we could expect to see an SMT above this high and then continuation lower. So we would use this TPD as a continuation TPD. What if we closed above it and it was SMT fill as well as a PSP? Yes, so did not mean to say tomorrow, yes. Markets are closed tomorrow, so it is important that you do nothing right now. Just sit still for right now and wait for Friday, because Friday is non-farm payroll, so we can get a little bit more clarity as to what's going to happen. Yes, NFP is generally low probability, so if you are less experienced or you're a little bit newer to the concepts, I would avoid, if I were you, I would just avoid it altogether. So yes, and another reason why we want to see this as a continuation TPD is because if we look at our premium and discount, we can see this is our premium, this is our range high, this is our range low. This TPD formed in discount. Our narrative is these lows right here, and I could be wrong. Price could reverse and then come take out these highs, but following with what's already in motion, since this TPD formed in discount, we could expect it to tag, run the high, hit this fair value gap on one of the assets, and then allow for continuation lower. If you are in a short position and you see price do a counter SMT, you close your position. You don't necessarily have to close it, but you could take a partial, because sometimes that acts as SMT market structure shift. And forgive me if this live stream is a little lackluster, because there's not too much information right now. We are in a very low probability, tight consolidation. So right now we're just waiting for non-farm payroll for price to tip its hand. Before or after NFP? Generally for NFP week, those first 3 days, Monday, Tuesday, and Wednesday, if you are a little bit newer, those will be your good days to trade. But if you're a little bit more advanced, then you can find something to do with non-farm payroll. But Monday, Tuesday, and Wednesday will generally be your best days for NFP week. And you want to wrap up your trading by the morning session of Wednesday. And like today, this Wednesday, or today that just happened, sometimes you'll have a trading day that looks really nice, like in last night's live stream. I wanted to initially see this fair value gap get repriced into and then continuation lower. And while we still do have that higher time frame narrative for this low, sometimes price will just deliver lackluster, and you have to wait until a big news driver comes out, like non-farm payroll or CPI, if there's a big news driver that week, to clear up the noise. Just for further clarification, we have futures data coming in right now for Thursday. Should we ignore it and compare highs and lows between Wednesday and Friday? Yes. And there might be a chance that price does on one of the assets before the market closes, that one of them will form the SMT. But Friday we could expect to see what has been in place and what we've been expecting. So ES should run the high for it to be a valid TBD, right? Since candle on ES bullish and NQ is bearish, meaning Friday could present a weekly cycle SMT to go lower. Yes. So we would expect to see the NASDAQ create the failure swing, and then the S&P or the Dow to create the stop run to allow for continuation. And the highest probability one to take the high is the Dow. So we want to see So we would like to see an SMT above this high right here, and then drop into that 29.83 and a quarter level. So when you are bearish, a TPD that forms in discount is a continuation TPD. Yes. If the market continues in the direction of higher time frame narrative, it will act as a continuation TPD. How to approach when intermarket SMT monthly bullish with GBP USD. So the reason why I'm ignoring this is because we already have, and we're going to get into a little bit of Wang probability theories, which some of you already know a little bit about. So as you can see, we have this monthly hit in SMT that is bearish right here. And we also have this weekly SMT confirming it. So we have a two-stage SMT creating that true reversal, which allowed price for the dollar to continue higher and for the pound and euro to continue lower. And this was also in sync with the futures triad, which is another reason why we used intermarket SMT. The reason why I don't want to see this hold is because we already have a two-stage SMT up here. Whenever you have an SMT, you don't want it to be back to back within the same quarter. If you do see that, that is low probability. So if we, for example, count the monthly SMT as 2 and then weekly SMT as 1, we have a monthly and weekly SMT up here. So 1 plus 2 is 3. And down here, this SMT would just be 2. So until we make something in price that is greater or equal to what is up here, then and only then will we see a reversal and take out these highs. Does that make sense? Is SMT skip sequence considered true reversal as well? Yes, as long as there are two stages, you can consider that a true reversal. Do we have daily time frame TPD for that monthly hidden SMT and Forex to confirm? We do not. And generally with hidden SMT, that will always be the case. More times than not. Need to go more into that theory? Don't worry. Remember, guys, we are only in this is only week 1. By the end of this, you will have you guys are going to be crazy by the end of this. We've only scratched the surface on many things. So if it's confusing, if it's just doesn't seem to make a lot of sense right now, don't worry. That is okay. That is normal. After you watch me do it time and time and time again, along with the other things that I'll bring and share with you guys later on, it will all start to come together and make a lot of sense. But in the beginning, it's very difficult because this is you're learning something you've never been taught before. Because nobody else on social media has what we have. Day tells us we should always trade 30 minutes before or always trade 30 minutes after the news. Is that true, or are there times when I can trade before? If you have an SMT with a TPD, or I'll say that again. If you have a TPD with a lower time frame SMT confirming it, you can expect news to expand in that direction. SET, or the settlement price, shouldn't be off all the time. We use all the daily range, so to me it should be off, shouldn't it? No. I always keep settlement price turned on. But you can toggle it off and on just to see what the daily candle did, like in this example, because you wouldn't have been able to see this daily TPD unless you had settlement price turned off. But whenever you have TPDs that form on one settlement price and not on the other, they are generally low probability. Can you help with a couple of random examples on advanced premium and discount sequence? Yes, there will be a supplementary lecture to that makes it a lot clearer. I've just introduced the idea to you guys. Can you talk more about how to know which is the true SMT for the week or month? Higher time frame narrative. And the higher time frame narrative is just what the largest cycle SMT is doing, or largest cycle TPD is doing, and it will continue in that motion until something equal or greater than opposes it. But you have to see me call these things live, like the fair value gap. You have to see me call these things live and watch me do it time and time again, so you can get on that same level as me, because that's true mentorship. I'm showing you what I think is going to happen. More times than not, it delivers. I explain why it happens and then what to look for next. And slowly, after time of you watching it over and over and over again, you'll begin to mimic and be able to do the same things and see the same things in price. When on NQ, the price retraces into a fair value gap, but there is no fair value gap at the same spot on ES. Is that considered an SMT fill? If ES is retracing into an order block or a wick, while NASDAQ is retracing into a fair value gap, yes, it could be considered SMT fill. my take is, and we've held this bias for a while, but these lows right here for the S&P is where I would like to see price draw towards. Bitcoin analysis. Right now, Bitcoin is not offering too much. It's in a consolidation, but you can generally expect it to continue a little bit of upside movement until a monthly TPD forms. For the daily cycle SMT skip sequence, is it possible to replace a H1 TPD with a 15-minute? For example, weekly SMT, 15-minute TPD, and 15-minute displacement. If you were looking at the 90-minute cycle, you would look at it for 90-minute cycle SMT skip instead of daily cycle. So we look for that initial SMT on the daily cycle, being the 15-minute, and then watch that 15-minute CSD with displacement, and then look for a microcycle SMT. How do we know when it will be an SMT fill or price will not fill the fair value gap and other assets and the other assets later on? So generally, to know, you'll have that initial SMT on your higher time frame cycle, and then you'll have that gap. If you drop one cycle below, so say we have a higher time frame cycle right here, and then we drop one cycle below, if that fair value gap forms in one cycle and that next lower time frame quarter opens up and then creates the SMT fill, that's how you'll know. So if it jumps from one quarter to one quarter. Sometimes it will be on the large cycle. So we'll form the fair value gap in one quarter on the higher time frame cycle, open up on that next quarter, and then form the SMT fill. But whenever price is really quick, and generally you'll see this in the morning session, you'll see that fair value gap on a lower time frame quarter, and then that next quarter opens up and then creates the SMT fill. How do you know if you should wait for a change in the state of delivery after SMT, or you should enter directly into the turtle soup? So generally, if we form that initial SMT and then do not form that second stage right after, so what do I mean by that? If there's no change in the state of delivery right here, say this is down candles, and then there was no change in the state of delivery in this leg, and then that next lower time frame quarter opens up and creates the SMT for a two-stage, that's how you know that SMT skip will not take place. But if we do not create, or if we do create a CSD, and expansion away from it, then you can expect there to be an SMT skip. So the only time you should enter into that turtle soup is whenever you can visibly and clearly see immediately that that second stage SMT is formed. Or the sequential cycle SMT. Yes, that is something we do need to work on because some of my students have been with me for a little bit longer, so they are a little bit more advanced. I'm not clear about SMT skip, for example, when we have a 4-hour SMT, we need to check at the 15-minute SMT right. It's related to time frame, yes. No, I do not use any other indicators besides the ones that you guys can see. These two, and this one is just so it puts my name up there, and then the quarterly theory one. What is an SMT fill? An SMT fill is whenever we form a higher time frame SMT and then form a fair value gap, and one of the assets fills the gap while the other asset leaves the gap unfilled. Is this another way of looking at SMT skip? For example, weekly cycle SMT, 90-minute TPD is a 90-minute cycle SMT. We will cover that later on because that applies to quartered TPD. Was there an entry for today after the 4-hour PSP candle? Like I said at the beginning, sometimes the market will look like it is going to deliver very nicely. Like the night before, we had this fair value gap outlined. We expected a retracement and then continuation. Sometimes it'll look very nice, but then it'll open up and be like this. So I'm assuming you're talking about this 4-hour TPD. So since this formed at 10 a.m., it is lower probability. But after it closed, if we mark out that entire range, and then go to the 15-minute, as you can see, as soon as the 2 p.m. candle opened, it was trading inside of a fair value gap within the TPD, and you could have taken a scalp targeting this high, but it was low probability. And another thing to keep in mind on why today was low probability, because personally, I did not do anything for today, and the main reason being we did not retrace into the fair value gap as we expected. But if we look at the economic calendar, you guys can see there was 2 p.m. FOMC meeting minutes in the PM session. So what have I taught you guys about whenever there is news in the PM session? What generally happens for the day? Exactly. Low probability. So this could have been foreseen. Can you skip 2 cycles using SMT skip or just 1? Generally 1, but there is a way to know for 2. Yes, and also yesterday was a large range day. How to know if time is in premium discount? Day tells us it's with the true opens, but in that case I have to wait for SMT every time because a true open without SMT is low probability. As long as you have higher time frame narrative and alignment, and the true opens say you're bullish on the higher time frame narrative, and then a lower cycle opens up with the true open, and we drop below that true open and form a TPD, sometimes you don't need SMT at all. And that is the continuation model, which you guys will learn. But that is going to wrap up this one. So hopefully you guys found this insightful and took something away from it. I know this one was a little bit lackluster because there's not really too much in price that is there to share with you all. So this Friday, things should clear up.